Yo, what's going on, guys? It's Arkham. I'm gonna talk about this trade that we took here on Thursday, December 7th, that netted us about $2,700. But I'm also gonna talk about this loss I took just before that and just the overall trading day. I think there's a lot to learn from this video. Overall, my bias, what I was looking at the markets, and just my entire thought process as I was taking the trade. Before we get into the video, make sure you guys are following me on Instagram. If you're not, this is where you can find me. Coming into a market here on the daily, some key things we want to take note of is this daily bullish order block, as well as the overall trend of the market has been higher prices, where the market has rejected going lower. What I mean by that was we'd have days like Tuesday where instead of pushing lower, where I thought we'd see a continuation of the prior day, Tuesday actually chose to consolidate rather than pushing higher. Overall, meaning that the bulls are still in control, the market still wants to go higher, and as ICT says, if the market wants to go higher, it will do so. So, coming into daily here, some key things that I look for is overall draw on liquidity, and this is my main draw on liquidity for the week, as well as the opening of this weekly order block right here. I wanted to see if we could get up into that level, as well as the overall fact that we did have this bullish order block here where price came down into the order block, but the bodies, as you can see, the bodies respecting that 50% of the mean threshold of the order block. When you have down close candles, up close candles, like this is a bullish order block right here. This is the last down close candle before we had a push higher. You want to put a fib from low to high of that body, and then you want to take note of the high, the low, as well as the 50%. As you can see, the body is coming down into that 50%, and then overall showing respect to it. So just looking at that signature and price action, plus the fact that we do have buy side liquidity above us, as well as the overall fact that Thursdays in the weekly profiling tend to be reversal days. So this gave me the confidence on the daily to be bullish, but at the same time I was also neutral in my bias today because of the overall fact that despite being bullish on the daily, we were inside of this weekly bearish fair value gap, and I wanted to see how did price react at that level at the opening if we would show support and going higher and creating a full-on reversal, or price coming back into potential 50% of this prior day's wick and then dropping lower. So overall, that was my if then scenario. If we could push higher and show support going higher, I'd be bullish. But if we were to show rejection or overall respect bearish order flow, maybe reacting off a H1, H4, some fair value gap or order block, and we showed that we would see a continuation of the prior day's trading, then I would be leaning more bearish. I'm also looking at the dollar here for my bias. So overall, as you can see for the prior day here, the dollar did come up and reach its objective for the week, which I did have for the dollar, which was this November 22nd buy side liquidity. As you can see, the prior day, the dollar did come up and reach that objective. So overall, coming into a market on this Thursday, we did have Monday, Tuesday, and Wednesday going higher. So overall on the daily, I wanted to see how did the dollar react here, seeing if it would find any level of support here. But if not, and we could see a continuation lower down into this daily order block. Coming down to H4 here, some things I want to take note of is this liquidity down here, which we did come down and take out at about PM session on Wednesday on the PM session, as well as we did dig into this long wick here. Thursday, the prior week's wick, we did tap into that level, and then after tapping into that level, we did see that bullish reaction. But off of that bullish reaction, I did want to take note of this bearish H4 fair value gap here. And this was very important for my bias. I wanted to see how did price react at this level. So two things could happen here. Either price would come up here, reject it, and then go lower, and that would, fulfill my bearish bias, or price would overall just kind of push higher or consolidate, and then we would see that push higher. So these were the two ideas that I was looking for here at this H4 bearish fair value gap. Actually, let me change that to H4. So those were my two overall ideas, my two overall biases that I wanted to see how did price react at this level. Coming down to H4 on the dollar here, we did want to take note of this bearish order block as well here on the dollar. As you can see, the dollar did push up into that level and then show overall rejection. So overall, this is signal to us that after taking out the liquidity here, dollar created a break of structure. As you can see, the dollar created a break of structure here and is now showing resistance at these bearish PD arrays. So overall, coming into the market on this day, my narrative for the dollar was bearish. Price is in an uptrend, it should show support at bullish PD arrays. When price is in a downtrend, it should show resistance at bearish PD arrays. So when price came back up into this bearish fair value gap and then shown this overall rejection here before market opening, that gave me a overall narrative that the dollar was bearish after taking out liquidity, and we could potentially see a reversal here on the dollar. Coming into H1 here, some things we want to take note of is this bullish order block down here with that long wick, this bullish order block, which after taking out liquidity here, we tapped into this bullish order block. Let me get the 50% of this level as well. Price almost tapping into 50% of that level. Price coming down, taking out liquidity, tapping into this bullish order block, and then overall giving a reaction which broke above this bearish fair value gap, making this level down here a balanced price range. When we have a bearish fair value gap, then we consolidate and then we push up. This level here with that bearish fair value gap to the bullish fair value gap offsets each other. So then this area now becomes a balanced price range. So for me to continue my bullish bias coming into the market, I needed to find some measure of support here and push higher. The moment that we start seeing price show respect to this H4 fair value gap and actually start to push lower back into this level is overall when we can see that the bulls are no longer in control, and overall the narrative for a reversal may not transpire, and then we would have to go into our bearish bias and wait for a pullback into a bearish fair value gap. But if price were to overall consolidate and then break above this level, never returning back into this level down here, just overall not return back into it, then we could overall continue seeing higher prices with a draw on liquidity being this bearish uh, fair value gap as our first area of targeting, as well as this prior high right here. This was a Wednesday high, as we could see an overall reversal in price action. Coming into a market here for the dollar on the H1, as we can see, we've shown rejection at this H4 bearish fair value gap here, as well as we did come down into this consequent encroachment of this wick. And as you can see, the dollar came down into 50% and is now showing some measure of support. So overall, coming into a market, my basis is I'm still bearish on the dollar despite us coming down into this level and it coming higher. I still want to see lower prices based on this overall order block. So what I want to see is price come up into this order block or potentially coming back up into probably taking out this high at the most, but I don't want to see price revisit back up into this level. But most likely what I wanted to see coming into market was price coming back up into this order block or this level here, and then overall showing rejection down into this level as our first draw on liquidity, and potentially coming down into here, into this bullish fair value gap right here as our final area of targeting for the day. Coming into M15 here before the market opens, this is kind of what I'm looking at here. We have this H4 fair value gap, and then we have that H1 fair value gap as our first drawn liquidity as to where price could come back up into, as well as this liquidity high, which is our final drawn liquidity, which price could reach back up into. So on the M15 here, some things I'm looking at are for inefficiencies, prominent highs, and potential, support in price action. So inefficiencies I can see is this M15 order block here. I want to see how does price react at this level. If we can get a break above this order block, then most likely we will tap into this H1 fair value gap right here. And if we could get a break above that H1 fair value gap, I have no doubt that we can reach up into this level right here, as well as this level right here for our final take profits. But overall in price action, we have to get into this area as well as this area as our levels of inefficiency and price action. And then some prominent highs here are this high right here and this high. These are two areas of draw that the market would most likely want to reach up into because there are pending orders right here. And then some levels of support that I want to look at here on the M15. We have this last fair value gap here. You always want to try to use the most recent fair value gap. Sometimes price may try to break this and come down into here, but there's sometimes it may just reach up into this level and then break higher. So you always want to use the most recent fair value gap just to ensure that you actually get into a trade. And we want price to see some type of bounce here on this M15 fair value gap. What we don't want to see here is price open up, show respect to this H4 fair value gap here, maybe tap into this level and then overall break lower and then continue lower. If we do see those signatures appear, then most likely on this leg pullback right here after breaking this fair value gap, I would take a short. Oh yeah, and looking at the dollar here on the M15, we are inside that M15 bearish fair value gap here. So overall, our narrative still remains bearish on the dollar. We want to see a rejection here on the dollar, either on this H1 order block here or dollar overall just opens up and drops lower from this M15 fair value gap. Okay, coming into a market here on the M5, market opens and we start to see that drop lower into that M15 fair value gap. And it was actually on this candle that I took my first long entry based on price coming down into this level, tapping into this bullish order block right here. And as price opened up and went higher, I actually took a long here. And as price came higher, it tapped into this level of this bearish order block here, up into this bearish order block level, and as price came back down, I actually took off the position as I was in too early. So I was a little bit more patient and I wanted to see how did price react at this level. My bias was still bullish though, but I got a little too impatient, so that's on my side there for that first loss. So I'm patient here. I'm watching price action, It comes back up into that bearish order block and then rejects lower. I want to see, does the next candle after rejecting this, you see how it came up and rejected that bearish order block, does the next candle here open up and drop lower? Then that would be very, very bearish. But if we can get the next candle to actually hold, basically not see price drop lower or break through this level, then that's overall bearish for the day. So as you can see on the next candle here, we see a big push higher. As price opened up, came down, and as price came higher, I actually took my second position around this level. As price broke, I took my second position. Stop loss just below this low right here, basically at the low. And my take profit here was about 15 points near this level here. Let me see. 89.25. Right here, just about 15 points on this overall bullish candle. Next candle we opened up, I scaled in my position with 2 more contracts about right here. Putting my stop just about down here. Then right here, I did take off my first position. So on the original contract, we can take off right here. Took off my first position and I left this one running for that final take profit. And then I ended up taking off my second position right about right here. As price failed, as you can see, as price failed to overall take out that high, and it was just showing overall weakness. The buying strength was not there anymore, and I was not looking to let a good trade on me go bad, so I took off the final position right here. I just moved my stop loss from down here to up there to trail my stop, and it ended up taking me out here. So for a total of about 11 points, 11.25 points with 5 contracts here, for a total about 27.50, and this prior trade here for about a 650 loss as well with 3 contracts. So overall, that was the trade today, and overall, just a really good day, ending the day off here for about a 3R. That's it for a video. I'll see you guys next time.